Chainlink powers Bridgetower in one of the largest commodity-backed tokenization deployments on record. Bridgetower is bringing the DOM-X Arizona copper-gold project on-chain, with the asset valued at $11 billion. The size matters because tokenized RWAs are still heavily concentrated in treasuries and credit. A natural resource project at this scale tests whether commodity-backed assets can move beyond niche issuance and into institutional infrastructure. The immediate pressure point is reserve verification, NAV updates, KYC controls, investor subscriptions, secondary market access, and the $25 billion pipeline, because the first reaction only matters if those signals confirm it rather than fade. The confirmed context is that DOM-X is the first tranche of a $25 billion pipeline of natural resource, energy, and metals assets. Tokenized RWAs excluding stablecoins are near $28 billion, with treasuries and credit making up about $17.5 billion and precious metals around $5.8 billion. That means an $11 billion copper-gold project sits in a segment that has not seen many deployments of this size. This baseline keeps the story grounded in Bridgetower-adopted Chainlink infrastructure to tokenize the $11 billion DOM-X Arizona copper-gold project and prevents early attention from being treated as final proof. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is a full Chainlink stack, not a single Oracle feed. Chainlink powers Bridgetower through CCIP for cross-chain access, proof of reserve for backing verification, NAV link for valuation data, and the Chainlink runtime environment to coordinate verification, compliance logic, and settlement workflows. In plain English, the system needs to prove what backs the token, what it is worth, who can access it, and how it moves across markets. Mechanically, the platform uses CCIP, proof of reserve, NAV link, and CRE to handle cross-chain access, backing checks, valuation, and workflow coordination. That link is what turns the headline into a concrete risk, access change, liquidity test, or adoption signal. The impact is on institutional tokenization. Bridgetower's platform embeds KYC, KYB, and AML controls at the protocol level, while subscriptions can be funded through fiat and stablecoin rails powered by Iron, a MoonPay company. That matters because regulated investors need more than a token wrapper. They need identity controls, reserve checks, valuation updates, and privacy-preserving workflows that fit financial market requirements. The affected side is specific. Institutional RWA investors now get a large commodity-backed tokenization case outside the usual treasury-heavy market. That group feels the practical consequence before the wider market has a settled answer. What remains unclear is adoption beyond the announcement. An $11 billion asset valuation is significant, but investors still need to subscribe, verification must remain current, and secondary market access needs to function. Commodity-backed tokenization also has different challenges from treasury funds because the asset is tied to natural resources rather than liquid debt instruments. The deployment is large, but market behavior still has to develop. The limit is also specific. The deployment still has to prove subscriptions, reserve reporting, liquidity, and compliant secondary market access. Keeping that limit visible prevents uncertain data from being treated as certainty. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Chainlink powers Bridgetower, the next signal is production evidence, reserve updates, NAV data, compliant subscriptions, and any movement through regulated DeFi or licensed secondary markets. If those pieces work, DOM-X becomes a reference case for tokenized commodities. If activity remains thin, the headline size will matter less than the actual investor flow around the asset. A stronger follow-through would show up through reserve verification, NAV updates, KYC controls, investor subscriptions, secondary market access, and the $25 billion pipeline. A weaker read would appear if those signals fade or fail to confirm.